Either I could say how people go from millions to zero, or I could say how people harm their portfolios. And I've seen a lot of people and selling houses in good locations and moving to absolutely down market locations simply because they've lost money in the market. So what are the ways, what are the patterns that I see in people dramatically damaging their net wealth? I'm not saying these people go to zero, because in India there is still stigma of going for personal bankruptcy, so people don't declare personal bankruptcies, but I've seen people dramatically damage their portfolio. Unbelievable. A jeweler writing off 400 crores because he did leverage trading. I mean, this is not the kind of money that you make in one generation. You have inherited it, you have worked hard, you have earned money, you have paid taxes on that, you have borrowed money from people who trusted your family over decades, perhaps generations, and you just wipe it out because you didn't know how to trade. And why would you risk all your capital when you can play the game with a much lesser capital? When you have 400 crores, why can't you play a 20 crore game and say, oh, I lost 20 crores. 20 crores doesn't wipe out a guy with 400 crores. So when you have 5 crores, why don't you play the game with 25 lakhs, right? It will not wipe you out. Yes, it will hurt you badly. Any loss hurts me. Even a 10,000 rupee loss hurts me. But why wouldn't you reduce the size of the game? It is perhaps greed. So first thing which I can think of is not understanding the business which you are doing and dramatically leveraging. If you do not know how to do day trading, don't come to the share market to learn how it is to be done. If you want to learn, yes, sit with an expert who is able to teach you and play small amounts of money. It's not a game, right? You don't want to wipe out your whole family by doing this. So that. And then I've seen other patterns. There are millionaires and I would say multimillionaires at least, and multimillionaires by US definition of a millionaire, who would penny pinch, right? Who would say, let's do this, let's do that, and they would be penny pinching. And then one day you see them splurge on something which they may not even use much, right? It's like saying, let's go to this restaurant and save some 50 rupees on the bill or 150 rupees on the bill, take any number that you want, and then going and buying a car which they're not going to use, right? Why would you do it? Why would I buy a yacht? Why would I buy even a car when I don't feel like driving? I'm happier getting somebody who comes with the car and driver and picks me up and drops me back, right? Why would I buy things which I'm not going to use? And these are not things which they buy, which is a small percentage of their net worth. Like if a multi-billionaire goes and buys a camera, it will not kill him, right? Because a camera can cost 2, 3 lakhs, 4 lakhs. But when you go and buy an asset which is say 10% or 15% of your net worth, the question is, why would you do it? It's very difficult for me to understand, especially for people with very high net worth. I'm not talking of somebody with say 50 lakhs going and buying a 10 lakh rupee car or a 20 lakh rupee car. There of course it will have to work that way. But when somebody has got 300 crores and goes and does a 50 crore splurge, the question you're asking is, are you in your senses? What are you doing, right? So those kind of questions come up in your head and you feel like asking. I mean, don't lose serious money by doing this kind of thing. Then the second set of people I see is not understanding the implications of tax on whatever they're doing, whether it is income tax, whether it is GST, and seeing how to get the benefit out of that as a family. There is something which you can do, right? Make sure that you do that properly. People don't do it. Many people lose track of the details of what they have done. They don't even collect bills. They don't know what they have spent on. They do not know that they have paid GST, which could be claimable if you're a business with GST implications, right? There was a chartered accountant who argued, anyway, I'm claiming the whole thing as an expense. Sure, you're claiming the whole thing, but imagine the cash flow that you're giving up by not claiming the GST the minute you incur it, right? So if I have to pay 2 lakhs of GST every month, then, and if I buy an asset in which there is GST of 17,000 rupees, then it means a cash outflow of only 1,83,000. So that 17,000 rupees is available to me immediately. The fact that I will claim depreciation on that is a completely different thing, but why do you ignore tax? Similarly, when people do not do tax harvesting in their personal finance, to me it is shocking, because that's one solid reason why you will lose a lot of money, right? Third, being emotional. Oh, my father left me this in my portfolio. My brother-in-law has asked me to buy. How can I sell this share? There is no place for emotion in your portfolio. If somebody has asked you to buy and you do not know why they've asked you to buy, and you have waited for the price to fall 75%, what are you doing? You're hurting your own portfolio. Did you check with the person who asked you to buy what he has done, what should be done? Because obviously the market is sending you a completely different signal. So don't get emotional about something like this. It is about making money. If I ask you to buy a particular share, it is because I think the price will go up. But if the price doesn't go up and after 6 months you find the price is exactly there, or the price is maybe 10% lower, pick up the phone and say, what is this? What should I do? Should I sell it off? And if there's no good answer forthcoming, then make this offer and say, look, I don't care about the loss. I'm worried only about my future loss. So if I have bought a share at 100 rupees and now it is 90 rupees, and you say you do not know what is to be done as an investment, let me get out at 90, let me get out at 75 or 85 or whatever. Tell me a price and I'll get out. If you think it is worth averaging, then create a new research report, send it to me, let us consider, right? Don't get emotional, and especially if the person is dead. I know people who have inherited portfolios which they have no clue what to do, and they will not act saying, oh, my father told me these are good shares. Yes, those were good shares 23 years ago, but not now, right? So sometimes not considering this is either laziness or inability, or saying, oh, I need not worry. That all, to me, all answers are stupid answers. Then too much concentration of their ESOP shares, and it more or less happens with ESOP shares that 80% or 70% of their portfolio is ESOP shares, and trying to ask them to get rid of it sounds very difficult. I mean, if I keep telling somebody, look, I have HDFC Bank shares and I think those are good shares, I'm going to hold. Try telling the same thing to the guy who's got 70% HDFC Bank, and telling him that, look, this is too high, you need to reduce. He'll say, but are you selling your HDFC Bank shares? No, I'm not selling, but I'm not at 70%, right? I'm at a much lesser percentage. So it doesn't matter what I do, what you have to do is more important. Don't try to copy what I am doing. My circumstances are different, right? So you need to diversify your portfolio. There is absolutely no doubt about that. Then complete lack of planning and foresight. I mean, somebody would just call up and say, I have 30,000 to invest, and I know fully well that she has not yet paid her credit card bill in full, right? So she says, no, I paid the minimum that is required to be paid. Complete lack of financial understanding. And I believe that if just because a person understands equity doesn't mean he understands how to borrow and how not to borrow, and how not to pay the minimum amount in a credit card. You can't be that dumb, right? Obviously they want you to pay less so that they can charge you interest. Be careful about these things. These things hurt, and I see people hurting because of such things, right? This is again causing a lot of damage to their portfolio. Another set of people are so-called generous. They are actually distributing other people's money, and they have zero understanding and respect for money. I find it very surprising, but these could be businessmen, this could be a professor in IIT, could be anybody. They just do not understand how money works. So when they do charity, they do not realize that some of their own priorities could be changed, they could be shortchanged. I can't understand how a businessman can borrow money, can ask other people to invest and do a lot of charity and not pay any dividend for 15 years, right? These are kind of people you meet, and you realize that there are very many wealth destroyers out in the world waiting to destroy wealth. And Many of us oblige them. And of course, the most important thing, lack of patience. When you get an opportunity, you have to hold on to it for pretty long. Don't run out of patience. Just because you bought a share at 10 doesn't mean you have to sell at 20. Be careful, sit tight. Thank you.